Wow, you're in Hawaii. Where's that, Puerto Vallarta?
Oh, this is hey Travis.
Hey, how's it going?
Hey, I'm good. I'm good. I was kind of hoping I'd sneak in here a few minutes early, but ended up being on time. So
Yeah.
I just saw your email. I don't have any materials per se to share, but do you have some materials that like maybe a training credit report that maybe I could, or I could just do.
Um, well, we can find out what you're using, and then we can like I can log in, I guess, to Advantage Credit.
Oh,
Um,
there's a few pointers. Oh, there you go. But first of all, I just want to say hi, everybody. I hope everybody's had a good month. It's been
yeah.
time flies, does it?
Geez,
Um.
crazy week.
Okay.
I
Awesome.
spent, I spent the last 3 days of last week in a like a business accelerator boot camp, and it was really cool because there was a lot of mindset stuff and um, reverse engineering of goals and things like that. So, you know, it was a good. Obviously, some of it's refresher stuff, and it's just good to hear again. But it was pretty intense, so it was pretty cool. But that's part of the reason of why I want to get this kind of dialed in. We're having some challenges with just overall, um, I guess, file setup so that
Okay.
we can use you know not just one processor, but multiple processors, because we have one and she's been getting really bogged down and it's kind of bottlenecking
Right. Right.
our flow. And so I'd like to be able to have alternative processors. But we need everybody to be on the same page for setting up a file to be able to turn it over to a processor, regardless of who the processor is, because they all kind of do the same thing. Our current one, I guess does a little extra, but that's also kind of bogging her down. So I want to kind of relieve some of that from her that she said she would do, because I think it's causing more issues than it is solving
I
them.
think that he got ahead, and most processors, they get excited, they want to help, and they want to get ahead, and all of a sudden they get bogged down. And the issue is every file is different. Maybe they're bogged down with 5 files that are really difficult, and is
Yeah.
the more you bug them, the more slow your file is going to be.
Yeah.
So I did see your email, like what you would like me to go over, and I definitely want to go over them. I don't have any material per se to share, but it's pretty straightforward. But I want to kind of point out, paint a picture to make things a little easier.
Okay.
So the first thing I wanted to start out with.
And we
Okay,
do have a couple of new LOs on, so that's why this one's going to be a little bit more basic of a training, and that's okay.
Okay,
So I definitely like to go over qualifying a client and kind of getting the file going. So
sure, absolutely. Okay, so now how to qualify buyers. What I want to say about that, the difference between pre-qualification and pre-approval. There's a huge difference. Pre-qualification, you're just basically pulling credit and relying on the customer's information, what they tell you, $100,000 a year or whatever. And then later, when you get their tax return, it comes back different. So what you want to do is you want to try, most of the time, you want to try to do this electronically. Get them to apply online through you guys, however, whatever system that you guys use. Okay.
Mhm.
You get the application, you review it, and then you email them back a list of documentation, what you're going to need: Social Security, driver's license, W-2s, and you should get their tax return anyway, and I will explain in a minute. Get their bank statements and so forth. They will email it to you, and then you're going to match their income and their bank statement and their ID card, their driver's license, again, it's on the application. It's really important when it comes to notary, because some notaries won't sign if there's an issue, or there's a middle initial missing or whatever it is, and you have to go back to underwriting. And underwriting will tell you, oh no, we have to repull credit because you didn't put down the middle initial, but there's a middle initial on a driver's license or what have you. It can be a little political, and you can waste and delay your time, everybody else's time. So it's really important that you gather this stuff up front so you can iron it out. Okay, driver's license correct, you pull credit and things like that. Now, with the income tax returns, you'll want to collect that regardless on whatever the program is. Let's say you have a wage earner, straight salary, he puts down whatever, okay? And he didn't tell you, he or she didn't tell you that maybe there's something in their tax return that might affect the loan. And how will the underwriter find out if you never turn in the tax return? In most cases, at the initial disclosure, when you push the loan out for initial disclosures, there is a form called 4506T. That is, once the customer signs it in the initial disclosure, whatever mortgage company you go through, like Caliber or UWM, they're going to pull the tax transcript. There might be something in there that prompt them a red flag where they like, okay, initial approval or maybe final approval. I don't know. We need a tax return. What I want you to know what's in the tax return before you actually not look at it, because there's nothing in a tax return, then you have nothing to worry about. You just file it away. If maybe there's something in a tax return and you didn't really think that's going to be an issue, if it comes back in the initial approval that there's something maybe that's required, at least you have the tax return. You're not like going back and forth piecing, information with your borrowers.
What kind of items would you be looking for that could throw off underwriting?
Like maybe the Schedule E, maybe there's a rental property or rental income in there that your borrower's not saying anything. Maybe the property I paid. Maybe your borrower is hiding. They got like $20,000 loss sitting right there. You don't want the underwriter to see it. Well, the underwriter somehow is going to find out.
Yeah.
Especially if your borrower doesn't disclose it.
Yeah.
Most mortgage companies have a fraud guard implemented system out there. So the underwriter will go on the fraud guard and it skims all the property. It's pretty cool technology. It skims everything about the customer across the United States. And it'll pop up, maybe they own property in Idaho or something. Or maybe they've been married or something. Somehow, if the customer puts down they were single, they didn't put unmarried, they put single, somehow they'll find out, oh, look like they were married like 5 years ago, 6 years ago, maybe 10 years ago. I've seen 20. And they're going to be like, oh, we want the divorce decree. And what are they looking for? Maybe, history, child support or spousal support, things like that. Taking a step back to the pre-approval. Okay, so basically when you're doing the pre-approval, you're ironing out like situation. But what if there is a situation and you have a realtor that's pressuring you that they want to submit an offer tonight, and you're like looking at this like, oh, this documentation said this. You don't even know if this is going to fly. You'll definitely want to reach out to maybe some of your lender partner and say, hey, I have a situation. What do you think? And then if it's that, then you go back to your agent and go, hey, I just want to let you know this is going to be an issue. I don't know if this is going to fly or not. We might have to work on it some more, things like that. Or another example, they don't have all their money. Say they're going to be short like $10,000, or well, in your world, it might be 30 or 40. What you could do on the pre-approval, if everything else looks good, if your borrower tells you, oh yeah, I'm getting my money from, that just simply means they don't have the money with them yet. You can put it on the pre-approval letter, other terms and conditions, and you can put, borrower down payment coming from whatever. So that way, you're putting the ballpark on the agent. If the agent decides to submit the offer, it's on them. They know about it, and you just leave it at that. If something blows up at the end where they can't get their money, guess what? It's not on you. That's just customary, and a lot of agents and loan officers don't do that. So I
Yeah.
really think you should.
Yeah, they just kind of use the template or whatever and pop it out.
Right. Right.
Yeah.
If going on to trying to get information, you want to leave your processors alone. You don't want to like reach out to them and say, hey, what do you think about this scenario? You want to stay away from that from your processor because they're so busy. I would highly recommend reaching out to what you should do. In fact, you should reach out to the mortgage companies. Travis, I think if you don't know what the answer is, I think you should reach out to each of your mortgage companies and see if any of them have an underwriting help desk where you email a scenario directly to, they call it the underwriting scenario desk. Sunworth Mortgage and Home Point. You have Home Point, right?
Correct.
Okay, Home Point, but you don't have Sunworth, right?
No.
No, okay, so Home Point. So Home Point has a underwriting scenario desk. If you email them the scenario, be brief and very specific, they will email you back within 24 hours and tell you, well, this is what the guideline said. They'll show you a snapshot of the guideline of that scenario. Like, for example, yesterday or 2 days ago, I wasn't sure, somebody was collecting income. They call it a border income, and I could swore FHA would use that as extra income. And Home Point wrote me back and said, only if they own the property, not renting the property that they're in right now, that they could use that income for the last 2 years. The good thing I actually wrote them, because now I have the real answers back and not like, oh, it should be fine, it'll be okay, we'll be submitted, we'll submit it. Well, had I put the property in escrow, that would have bit me in the rear end. So I really think that if they have a scenario help desk,
use it.
right, and you should utilize them, even though you may not be submitting a loan through them. You might be thinking about UWM. Well, UWM's a lot quicker or whatever. You know what I mean? So keep that in mind.
Yeah.
Right. I think. Okay. So we got the pre-approval. Now, before I move on to the next subject within the pre-approval, are there any questions so far?
Just to be clear on that was all great. When you actually get your application from the borrower, how do you, I guess, reverse engineer that to see how much they qualify for?
Right. Okay. So once they send you the application, it's already assuming it's going to be in your system. When you pull credit, and you make sure that everything is structured properly the way you want to see it. Depending on your LOS system, I believe you said you were using LendingPad, right?
Correct.
No? Okay. I'm not familiar with LendingPad, but if you look at the debt income ratio, you'll see the front end and you'll see the back end. Okay. Most of the time, you want to pay close attention to the back end. Where the front end comes into place is like if you're using programs like, if AUS doesn't like it and they have to manually, underwrite it, that's when the front end kind of get picky. They might say something like, if you look at the guidelines, like on the FHA manually underwriting, they might say something like, front end can't be more than 29%, which is housing, and the back end can't be more than, I don't know, 43 or 45%. When you're structuring your file, you want to look close attention to the debt income ratio. And if you're looking at it like you're not getting your AUS approval or the DTI, the debt income ratio too high, look at the liability screen and see if there's anything that needs to be paid off at closing. There could be something like, or good situation, say if a borrower have a car and their car payment, say $1,500 a month, but it's that they have another 9 months left on it. In most cases, check with the company that you want to submit to. In most cases, you can omit it because they're looking at it. Okay, well, this is going to be paid off in less than 10 minutes or less than 10 months. They will omit that payment out of the debt income ratio, which is kind of cool.
Yeah.
if it comes right down to it and you're like trying to tweak all the numbers. And you know, if there's any credit cards or if there's anything that need to be paid down to zero at closing, the best thing to do is not have your customer do it. Just have your customer do it through escrow at closing. So you tell the underwriter, okay, this would be, please condition the payoff at closing. And what would happen is once the loan funds, the escrow agent will take the they will take the stuff that need to be paid, they will certify it once they close out the escrow. And I think that there's many cases that you can do that. Now, before I get into credit, was there any other questions besides debt income ratio within the application system? Do you guys have any questions in regards to that so far?
Everybody should be able to talk, so.
Oh, okay.
Go ahead and pipe in or raise your hand, either way. So.
Can you all hear me?
Yep.
Okay.
I can hear you good, so.
Okay, good. Oh,
so I know the audio is working.
Okay. All right, so assuming we don't have any questions, I want to get into credit.
Okay.
It's going to be brief and paint a picture about credit. When you're pulling credit, some of the things you want to look after is some of the description. Okay, when you're looking at the credit report, say auto loan, you'll see a description, you'll see, you know, monthly payment, you'll see the balance. Look under comment. If there's anything in there that says being dispute or in process of being dispute, anytime that anybody dispute
Paul froze up.
A credit line, the credit bureau actually, if you have a file that's a 620 FICO score, middle score, and there's one account that's being disputed, there's a good chance that that loan may not fly. There's a good chance that the FICO score would drop under the threshold, or there's a little chance that that loan, the FICO score will actually go up. It all depends on the situation. Student loans. The reason why I'm rolling my eyes is there's been a lot of changes with student loans and how you have to underwrite them. So say you're pulling credit and you see a student loan. Don't assume that's their monthly payment automatically, okay? That's just what's being reported. The guidelines between FHA and I think Freddie Mac, I might be wrong, you have to look it up. One of the Fannie or Freddie and FHA, they make you calculate 1% of the balance to make it a payment, okay? And a payment, an invisible payment, what I call it, for the debt income ratio. Only if it's because if the monthly payment is zero, or maybe they're in a income sensitive repayment plan, they don't like that. They want you to use their percentage to count it against the debt income ratio. It used to be 5%, with FHA, and they brought it down to, I don't remember if they brought it down to 0.5% or 1%, but it's one of those two numbers. So you want to definitely be really careful when you do that.
This would be for deferred status student loans.
I'm sorry, what was that?
This would be for deferred status student loans.
Right.
Ones that are in deferred status at the moment.
Right. Correct. Yeah. I'm trying to think what else. What other thing that might be?
I know Dean had a file like that where they have some student loans that the parents co-signed on, and it's kind of throwing off the file for the income. So yeah, we did run into that recently with a borrower.
Still having the problem.
Yeah, we still have the problem. Yeah.
Were you guys able to resolve it, or?
No, because they don't have like very much income. Dean, you know the file a little better, but.
Right. We he's tied on the income, but he's waiting to see if he actually wrote to me yesterday. And is there any lender who could take out the student loan that they're not even sure they're going to have to pay? I'm thinking I only deal with real estate, commercial, and business. I'm sorry, I don't have any lenders for student loans. Maybe you do. I don't know.
Yeah. Pretty
take
interesting.
out student loans?
Yeah, he wants to figure out how to get it off his name into his daughter's name only.
Oh,
Yeah,
okay.
yeah. Basically refinance his student loan to his daughter's name.
Yeah. Pay that out.
Um,
I'm just letting you know, that's what it happened.
Yeah.
so, okay, so yeah, so you got to be really careful with the student loan when you get to that, and it can bite you.
But it's
Now,
one,
the other
wait,
thing- I'm
is
sorry.
it 1%? The payment is 1% per month? So it's an 8-year payment?
Well, this is where the tricky part. VA will let you do, say the balance, they'll take 1% of the balance and then you divide it by 12. Fannie and FHA, I'm getting mixed. I'm seeing both, where they only do 1% of the balance is the monthly payment. But then I see another company doing 1% of the balance divided by 12. So I'm not sure when it comes to that, but I do know for sure on a VA, they divide by 12. And I'm pretty sure you take the 1% or the 0.5%, depending which program it is, it's for that month. I know it's pretty tight. The payment will look pretty scary when you do that.
Yes,
Yeah.
okay, thank you.
There was something, let me pull. I have, trying to see.
Yeah. So basically, if it's in deferred status, they have to figure out or estimate what this payment could be. It sounds like they're kind of
Right,
estimating on the high side, I guess, with the 1% or the 0.5%.
right.
Makes it safe for them.
So $100,000 loan, you have to figure $1,000 month payment. That's, ouch, could hurt. So, yeah.
I'm trying to pull something up to see if okay. So that's credit. That's the stuff that you got to be real careful about. The other thing is, well, before I go into AUS, is there any other questions about the credit report that you guys want to point out?
No, I just want to say that we can run it through for the team. You can run it through Lending Pad. You can also, everybody has an account login with Advantage Credit, and you could just go direct there and run it as well. And then just get the borrower authorization form to pull the credit and get the credit card payment from them if you're not fronting it. So that helps me with accounting, because once a month we get the bill from Advantage Credit, and then I have to go through and figure out whose
what?
borrowers are whose, and that's why I send out those emails like, hey, I don't know who these ones are because they're not in Lending Pad, and I don't know who they are. So if you're charging the borrower or using your own credit card, then I don't get those bills, and then I don't have to sift through everything. And also, I think it's just good practice to charge the borrower up front, because it does, even though it's $31 or 32, it ties them to you just a little bit. It gets them to commit to you just a little bit when you do charge them for the credit.
It's like, I think it depends on the market. It depends how you guys, deal with your clients and stuff. Everybody does it different. Me personally, I pay for it up front, and then I actually get it, reimbursed at the end.
Mm-hmm.
Some people have an issue, some people don't. But you said you have Avantis, right?
Advantage. Yeah.
Oh, Advantage. Is that the only credit reporting company that you guys go with?
Yep.
Okay. Do you have options for other ones, or
I haven't signed up with anybody else. That's just who I signed up with, and that's who we have.
Okay, so the one thing I want to say about credit is, adding to credit is credit supplement, or maybe FICO rapid rescore. There's something on there that your client's like, no, this is not mine, or, oh yeah, this should have been changed a long time ago, or maybe the FICO score is really low. You could do a rapid rescore, but of course, that all of that costs money. And so those are just some ideas. Depending how hard the file is or how easy it is, you might have a client that beating you against the head with their 690 FICO, and if you were to get them to 740 or 780, you can actually log into the credit company, and they have what's called a credit simulator. It's where you click on the credit report of the actual file that you pulled. Like Advantis is what's the one I'm used to. I would click on their account or the credit report, and the thing will pop up, and I will give them a scenario in the computer. Okay, this is paid. This is paid. And then as you're clicking, it actually provides a projected new FICO score. And it kind of give you an idea whether you should do a rapid rescore or not. When the mortgage market crashed, when things were starting to get better, like in 2012, 2013, I was doing a lot of those just to get loans. And so you might want to consider that and find out how much it costs with Advantage. I have the option of Advantage as well. All I know, everybody tells me that their customer service level is a little bit longer than usual on the turn time. Huh?
At Advantage.
At Advantage.
Yeah.
I've never used them, but that's what I heard. But anyway, so you could do that. I think that would help you in your business. The other thing I want to point out about credit is very important. So if somebody has a collection that the underwriter wants you to pay, whatever you do, don't pay it during escrow. Pay it, you tell the underwriter you pay it at closing. Because let's just say you pay it during escrow, and if for some reason your file does not close and it delays, if something happened, let's say something's wrong with the property, you're in escrow another 45 days, and for whatever reason you have to repo credit, anytime, 99% of the time, anytime you pay a collection account down to 0, your FICO score will actually drop. And so you want to definitely nurture that. So that's why you pay it at closing, the underwriter will be cool with it, because they know that escrow is going to pay for it. And they'll certify.
So any payoffs, pay them off at closing. This is the moral of the story. For collections or anything that needs to be paid off,
well,
get your UTI down, any of that.
If collections is a biggie thing, it's the one thing you don't want to pay off during escrow.
No, I'm saying at close of escrow, like have escrow pay off at close. Yeah.
Right. I was going to suggest that, yeah. But let's just say, they want to pay off a car and they have good credit in general. If you go to the credit simulator and see if it's an installment account, it should raise the FICO score in most cases. Credit cards, whatever you guys do, tell your customer don't close any credit cards, because even though they might be 700 FICO, if they had a credit card for like 5 years and they close it, closing a revolving account that's not secured would actually also drop your FICO score. So you definitely want to pay attention to that. The other suggestion,
is it a short-term drop or more of a long-term one?
Right, absolutely. The other thing I wanted to suggest is find a credit repair company that you want to partner up and learn about how credit works and what to do, what not to do, things like that. That would definitely be helpful. Okay, so any other questions about credit before I get into the AUS? Anything?
So quick question. Some of the clients that I have, they decided, they're going to pay down some of their credit cards because the rates were too high and take it to another one. And it's like, even if they just pay it down, isn't there like a 30, you don't know when the credit, when it's going to be reported. So you could blow 30 to 45 days or longer by the time it actually shows up, correct? On the credit, on the credit now, reports?
In the credit simulator, if you put down, say they pay it down, not to 0, like you're talking, what if they, pay it down to X amount of dollars?
Right.
Credit simulator will actually give you that option, what the projected FICO score might be. So let's say the rule of thumb is 30%. You should, revolving credit debt should be no more than 30% of the credit limit. Above 30% is risking that the FICO score will go lower. So assuming they're, let's say, maxed out, for example. If they're maxed out and they bring it down to 30, most likely the FICO score will drop. Even when you pay it down to 0, it should drop as long as you don't close the account. And I would highly recommend you fool around with the credit simulator and just fool around with it, and you'll see how the FICO score goes up or down, no change. Every client has a different case, different profile. So, yeah.
Okay, thank you.
So just to be clear, you said if they're maxed out on the credit card and they pay it down to 30%, you experience the credit score dropping?
I'm sorry, up. Sorry, I meant up.
Okay, all right. That makes more sense. Okay.
Yeah, I'm so
If they
sorry.
pay it off, then you experience
You
it
got me.
dropping?
Yeah, it goes up.
Okay.
The credit score. So let me take a step back.
But it takes how long? It takes 30 days or longer for it to be reported and uploaded, right? Usually?
If you don't do a rapid rescore,
Right.
if you don't do a rapid rescore, so whatever changes happen in the current month, it's very possible that the new FICO score may not reflect until the end of the following month. It depends. So I would highly recommend you do a rapid rescore. And they also have a rush feature where normally rapid rescore, every credit company is different. Normally they would say something like, for example, I don't know, 10 days to reflect. If you do a rush on top of that, they'll say within 3 to 7 days. So the credit company will come back and tell you, okay, here you go. We already pulled credit. Here's the new FICO scores and so forth. Use this reference number, in your AUS system.
What charges are you seeing for that with, I know they're all probably kind of similar. So what are you seeing as far as a charge for a rapid rescore and then a rush on top of that?
Okay, good question.
Just so we can factor it in with fees
Right.
for the client, on trying to get them set up.
Okay. I'm going to give you an example. Every credit reporting company different, but I'm just going to throw out a number that's customary across the industry. $30 per trade line, per credit report, per there was one other thing. Oh, and per credit score. So, and if you want to do a rush, they usually add a different fee, but it could be very well $100. I mean, very easy at minimum.
Mm-hmm.
That's one account. So you just got to remember that. And now, when you're doing the rapid rescore and the rush and all that stuff, when you submit for it, they usually like advantage. I'm speaking on them because that's what I know about them. So if I'm clicking, okay, I need this trade line paid off. I need to do a rush. I need all three credit reporting. And it's like a calculator at the bottom will tell you the amount. And if they have a bunch, I've seen about $300 to $500. It's very easy. You have to look at, is it worth it? It depends,
Yeah. Is it the difference between qualifying or not qualifying, or this rate or that rate? Yeah.
Right, and there's a chance that they may still not qualify. There's a good chance. Advantage. I'm trying to think what else. Rush.
Let me ask you a quick question, just to follow the math, because most of the people that I would work with, there always seems to be in a rush. So let's just say they have five cards that they need to clear up. They might have 10 and 20, but 5 of them would help. So 5 times 3, that's 15 times 100, that's $1,500, and there's no guarantee, right? Mm-hmm. And they have to pay it up front. It's not like they're paying it at the end of the loan. This has to be paid by somebody now, correct?
I'm going to get a $1,500 bill if it's not. So, yeah.
Well,
Advantage Credit's going to want the payment.
Okay, just making sure. It's not like they can get paid at the closing if it works or not.
You can get reimbursed, right?
Right. No, it's like an appraiser. They're getting paid no matter what. Okay, got it.
I don't know how it is set up on your end. I'm just trying to think how it's set up on my end. I think it get billed, but I think they're going to want that either being billed, invoiced, or paid up front. I don't remember it. I honestly don't remember, but it's going to go either way.
Well, if it's not paid at the time of getting it with our credit, then we're going to get a bill at the end of the month for all the charges that weren't paid with other credit cards. So we'll get our company bill.
And then the other thing is, this is one guy.
Okay.
about a year and a half ago, he bought a house 2 years ago, then his credit dropped. About a year and a half ago, I needed to do something with his credit. Okay. I didn't do anything with his credit. I kept pulling credit and kept telling him, well, this is where you're at. The rates are not low enough to, make it worth refinancing, things like that. I think a year and a half later, I did $100 worth of credit pull just on him, for him, because it's been a while. Credit report expires and so forth, and then the rates gotten low enough where it make it worth his, refinancing. So where I'm going with that, when in the initial disclosures, I went back to the credit report. I went back a year and a half, and I added all the, how many times I pulled credit. It was about $100. I made sure that was on the initial disclosure, and I got my money back. You definitely want to pay attention to what you do with the credit report, because if you put certain dollar amounts, if you left out certain information, you're not going to get you may not get all your money back. So you want to be really, really careful about that. Okay, so any other questions so far before I move on to the next section? Are we good on credit?
Looks like we're good. Yeah.
Okay. AUS. AUS can be a nightmare or it can be your friend. AUS only guides you. Okay. So say you run a file. Okay. You run a file. Now I'm going to be honest with you. You open it, you run the file, the box pops open, and it's thinking, and then it spits out approve eligible. This is me when I first started business a long time ago. Oh, great. That's all I need to know. I don't even look at it. I just got all excited and move on. I've learned a lot of lessons in over the course of 17 years of my business. I've learned to actually read it all the way to the bottom, to the very last line. And there's been a lot of changes with AUS. So some things that are very sticky is income. For the most part, if you have a W-2 borrower, that's just straight salary. It's just straight monthly salary. You should be fine, okay? The areas that AUS cannot read properly is anything to do with variable income, like salary plus commission, salary plus bonus, or hourly plus commission, hourly plus bonus. It just knows that you gave it a dollar amount. It doesn't know how you're calculating it. So just know anything that you put in the boxes in the application, the AUS is going to read it based on what you used your finger to put in. And it could very well be error. It could very well be an error. And where I'm going with that is the underwriter, when they get the file, I want to say 95% of the time, they're going to change your income calculation. No matter how well experienced, no matter how smart you are, they always find a way to change it, no matter what. So you want to be really careful when you're running AUS, especially on a pre-approval. I know I'm going too far with income, but I'm going to give you an example. You're doing a pre-approval, okay, and you see salary plus commission and salary plus bonus, okay. So you got the salary, you put the salary in the base salary, the base salary in the income box. Now, what do you do with the income or the commission? You just don't know what number they're going to use or if they're going to use it at all. What I always tell people, so we're in 2021. Okay, I would tell them, okay, give me your last 2 years of W-2, okay? And I'll also tell them, give me your very last paycheck stub for 2020 and very last paycheck stub for 2019. And I'll tell you where I'm going with it. In the very last paycheck stub, you're going to see year-to-date for commission, bonuses, and all that. So you would take the 2 years of those income, the number on the very last day, one's 19,000 and the other one is, I don't know, 18,000. You would take, you would add them up and divide by 24. That would just be like a no-brainer. You use that as a commission or bonuses. Now, what you want to be really careful is the existing year commission and bonuses, depending on the nature of their business. Do they get the commission bonuses once a year, or is it based on performance of their job? So you want to like calculate it in a way where you're being conservative in one way. So that way, when it goes into underwriting, you just got to know that your income is not going to be the same. There is one mortgage company that I know, actually, yeah, only one mortgage company that I know of that will actually calculate the income for you. If you submit the tax returns and or W-2 or however, it's SunWest Mortgage. They'll actually do it before you even register the loan. Do you have Stearns, Travis? Oh no,
Who?
Stearns Mortgage, Stearns Home Loan.
No.
No, okay. That's the only reason why I brought that up. There's a company called LoanBeam. Have you heard of that? Okay, LoanBeam, you take the tax return, you literally scan the tax return, and it spits out a spreadsheet, and it calculates all the income for you.
So this is a product.
Yeah, and
Okay. Loan Beam.
I'm sorry.
Loan Beam, BEAM. Okay.
Like you're beaming. Now they are expensive, but there's another mortgage company, or not mortgage company. I'm sorry. There's another company called Blueprint. Hold on. Blue. I think it's Blueprint. No, Blue something. I'll have to look it up.
If you remember, just text it over to me.
Yeah.
Yeah.
Oh, it's the same thing. You scan the tax return and they spit it out and stuff. And I think that's super important because if you run into self-employed, for sure the underwriter is going to change everything, especially if it's Schedule E, if they have rental property. Although Schedule E is pretty easy to calculate, but where the complications come in if somebody has an S corp or LLC and they have losses here and they have gains here, is it a deed? Did they do capital gains? It gets the timing can take forever. So anyway, that's income. So you want to be careful when you're running AUS. You want to put the specific information in there. Get close as possible when you're running the AUS. It'll give you the right answers. And in some situation, it will give you an unapproved or refer eligible, depending on the situation. And if you like the approved eligible better, just know that you might be like, okay, you're in between approved eligible and a refer eligible because maybe you're not really sure about his income or the bank statement or anything that you put your fingers into the LOS system. Because the underwriter is going to run the AUS until she finalizes the loan. She's going to rerun it. And that's the scary part because things change. So you want to be as close as very specific at the beginning, so that way, if there's any issues, you can take care of it at the beginning, not at the end. But then just remember, anything can happen with AUS, and it may not be income related. It could be something else, and you'll get like a refer ineligible. It depends. The other thing about what's really important about AUS, if you scroll at the bottom, it's going to tell you, Fannie Mae will tell you how many months of reserve they want by closing. Freddie, most cases, you won't get a reserve requirement, but then again, it depends on the situation of the borrower profile. So a lot of people miss that, and you'll get back on initial underwriting. They're like, wait a minute, why did it say 6 months of reserves? And they're trying to buy a second home in Big Bear or Idlewild or whatever. So you want to pay attention to that. That was the one thing I was not paying attention.
The reserve requirements?
Yeah.
Yeah.
Especially there's been a lot of changes on Fannie Mae, because Fannie Mae used to be a lot more lenient than Freddie Mac. Now the role is kind of like turned around. So it used to be where primary home, second home together with Fannie Mae, you didn't have to have reserve in most cases, but now the require I see it 6 months, 9 months. There's a little cases I'll see like 0 reserve. Anything about AUS? Any questions you want about AUS?
See any.
Are we good on AUS? Yeah. Okay.
Travis,
Yes.
Go ahead.
on the AUS, on our lender pad, do we have a link that we could send to our clients? Like we do over on UWM side?
Okay. What about AUS inside a UWM site? What was that question?
On our lending pad.
Oh, okay.
on LindyPad, do we have a link that we could send to our clients to fill out just like a Blink?
Oh, I think that's a question for Travis. I don't know.
I
I'm
was
not
just thinking
sure.
of that right now.
To get the application, or
Yeah, the application. Like an
there is a
app.
direct link in everybody's lending and pad account. It's a little weird to get to, but I can show you where it is. And then you can take applications straight into lending pad. And actually, Blink is nice because it's in there with UWM and stuff, and you can still extract. But the lending pad one is actually branded a little better. I don't know, just it's a nicer branding, and it will drop everything, the 1003 right into the lending pad file or into lending pad, so you don't have to do import export stuff.
Okay. All right. That's it.
Okay, so let's get to the processor.
Okay.
You're gonna make you need to make your processor your friend, even though you might not like the processor. I know this sounds kind of weird. Okay. If you put yourself in a processor's shoe, just try to think of every scenario, how they're being treated, not just from you, but from other companies or other loan officers. Just think about it. They're working so hard, and you just got to treat them well. You just have to, no matter what. If you have a file with them, you have to treat them well. Sometimes when the processor gets so overwhelmed, bombarded, and you really want to use them, you can kind of make a deal with them and say, hey, I know you're very bombarded. We just got the initial disclosure. Just look at the conditions list and just pick maybe 2 or 3 items. Tell your processor in an email to, hey, you're busy. I just want to let you know I'm taking on condition 1, 2, and 3. You take the best or whatever. That will make the processor feel, okay, this loan officer is working with me. I'm so busy. So creating that relationship with the processor is really important, because there are so many third-party processing companies right now bombarded, and it's not even funny. Even I have 3 processors. I have a main one, a backup one, and another backup one. And they're really busy. And I really think how we got to that point is due to the regulations in our industry. There's just the way things are regulated today. It's making it difficult. It's making it difficult to pay a processor, the timing. And what I'm talking about is the processor have to worry about the LE. The processor have to worry about the CD. The processor have to worry about the COC, where in the past, they only had to worry about the LE, and the LE wasn't even an LE. It was just a good faith estimate. Hey, let's just put this number on here and we'll change it later. We'll worry about it later. You can't do that. It's like you got to create the LE, and then they're going to say, hey, Paul, here's a preview. Take a quick look at it. And I'm like, okay, I can look at it this afternoon because I'm busy in the morning or whatever. And so the time is set back everybody. Okay. So you just want to work with them. Find a system that if you want them to provide you a preview, just make a deal with them. Okay, send me a preview. Also, if you can send me a quick text just to let me know that the preview is there, and I'll try to find a way to take a sneak peek at it and tell you to go ahead and disclose it. And then once the file is disclosed, everybody's on a time waiting period. Okay, did the client e-sign it? Is it QM? We have to wait till they actually e-sign it before you can actually order the appraisal. So you can see how busy they are. Okay, so create the relationship with them. The cleaner the file that you give them, the more they will love you. Because when you go and ask them, hey, can you take this file for me on the next submission, they could very well tell you now, maybe they don't want to work with you. Maybe could your file take a longer time for them to, jump in, vet it all out. If the processor knows that your files, the majority of your files are clean, if they're super busy and you really like them, they're going to take your file. If they know you're sloppy, okay, I'm a processor. I just closed the file with you, each one of you. Man, W2 borrower looks pretty easy, but the files were sloppy. I don't want to work with them. That's what I would do if I were the processor, as a experienced processor, just because I'm so busy. So you'll definitely want to make sure the cleaner the better. Ask your processor how would they like the file set up. You know, I don't know what mortgage or what third party processing companies are using, but just ask them. Maybe they have a system in place that will help them. You help them, have them help you. Any questions so far about the processors?
One quick one that we ran into, just a quick issue on communication. Do you, before your loan, do you do any review of the loan docs before they go out to the borrower?
I mean, like,
To make sure names are correct and things like that before they actually hit the borrower? Or
to be honest with you, when I first got into business, I did, because I felt like I wanted to be more in control. My biggest thing is just skimming through. Well, hold on, let me think here. Yeah, my biggest thing is skimming through. Is it in a trust? Is the name correct? You know, the interest rate and all that, because back then, somehow when something was wrong, you won't know about it until the escrow company actually gets the docs. Today, just the way things are set up, I'm not worried about the interest rate, because you're going to get that, you know, at the CD. You're also going to get, you need to be involved between the title company, the escrow company, and your processor. You need to be copied on all the emails, because they will communicate back and forth. And your processor will actually say, okay, the name needs to be this way or whatever. If they're attaching document, just open it real quick, just look at it. If everything looks accurate, everything looks good. If you let your processor do everything in terms of all the reviewing, like loan docs or the LE, it could cost you money. Did they miss, you know, did they leave out a fee, and maybe a heavy fee off of the LE? If they did and they disclose it, guess what? Either you got to eat it or you got to start the file again. And if you have to close in 15 days, you're not going to want to start the file again, unless, of course, maybe if you're with UWM. But what if this is the file that UWM can't do? You have to take it to a different lender. So, yeah, if I were you, to answer your question, Travis, just skim it. I haven't seen any major issues since the new regulations that were put in place for them to spit out the loan docs.
Yeah, we've just had 2 files recently that had spelling errors. Well, one had a spelling error on the name, and it had gone to escrow already. Buyers went to go sign. They're really upset because, you know, the name was incorrect. They had to get sent back, so we lost time. And then Dean just had one recently too, where the ex-spouse had gotten added on, but he wasn't on the original. It was a refi, and so that caused some turmoil as well.
Well, not in every company system, but I do know Caliber, in their system, in the LOS system, I don't remember what page it is, you can actually see some of the data that's being put for the loan docs, like the name, the trust, and all that. So when it gets to final underwriting, you can kind of go back into the system and just look at it, just because sometimes somebody makes an error by putting an extra character and they didn't mean it, and it will cause a delay. Some of the other mortgage companies, I don't know, but I wanted to ask you, do you have PRMG?
No, they're on the list
Okay.
of getting approved for, but we have, I don't know, we have like 12, 13 approvals right now. So I've kind of slowed down on them a little bit unless someone's asking for something specific.
Is there a specific reason why did you sign up for PRMG? If you don't mind me asking. No, why you did or didn't or whatever. You said
I
you
haven't yet. No, they're on the list.
Okay, I thought you did. Okay.
No, not yet.
Okay. You know, honestly, you don't need them.
Yeah.
The other thing you want to look after is how the mortgage company processes their loans. How the mortgage company, maybe in our next class, I can kind of paint a picture how the mortgage company works, how some of them do and don't, and which mortgage companies to actually stay away from, because all your reputation falls on you.
Yeah,
The realtor doesn't care about what mortgage company you're using. They just want to close it yesterday.
yeah, they usually don't even know.
Right. So that would be super important. Does anybody have any questions so far with processor? What other issues are you having with processors? Besides that they're bombarded, are you having any relationship issues? Are they responding or kind of?
The current one just got a little sideways on us over the past couple months. She started off really, really good, and it's not that she's not good. She's good at her job, but communication's not quite there. You know, she just kind of takes the file and goes, and then we get left out of communication, which is getting a little frustrating. So I'm gonna have to have a conversation with her about that.
Okay.
And then she was just super bogged down. So we were waiting, you know, for things that should have been done that day, maybe taken a week. You know?
Yeah. Think about this. Well, if you can put in your mind that a processor is always bombarded, find a streamlined way to communicate with her without. I know it's gonna sound terrible, without bogging her down, even though you're trying to not to do that. Yeah. So you want them to do all your work. You don't want them to do all your question answering, especially scenarios and things like that. You want to just take it straight to the mortgage company, because, you know, whatever, say, for example, you write to Home Point and they write you back, oh, good, we could do that this way. Take that email and then just put it with the file. This is what this company says. Well, you want to be careful, you know, depending on the situation. But, you know, the underwriter comes back and denies the file and said, no, you can't do that. You're like, well, wait a minute. I have this document from Home Point scenario that said you could do it. So yeah, yeah, in regards to processor, the more processors, you said you have a total of 3, right?
No, we have just one.
Oh.
But I've got 2 other ones that I've talked to that can take on more business right now. Both of them came from referrals. So yeah, one of them, other Paul. We have new Paul and old Paul. So he referred one over. I talked to her for a while. She seems excellent. I just want to make sure that we, as the LO team, can set up the file properly for her, so that she can run with it, because it sounds like she doesn't mess around. Like she's on a, you know, working second by second basis. So
Right, gotcha. Well, maybe you and I, Travis, can schedule a different Zoom time. We can talk about, you know, more of that. I'd be more than happy to point more directions on that.
Yep.
Any other questions that you guys have regards to anything? Are you feeling overwhelmed with processing, or go ahead, Dean?
No, I just want to say thank you, and I appreciate you coming on, and I would like to hear more. I mean, you've covered a lot of territory. I'll be honest with you, I've never been on AUS yet. I've only done a couple deals, and most of my time is spent trying to work with the borrowers and making sure they're happy, and then meet deadlines. And I'll be honest with you, I've only, well, I have 5 that I've done so far, but 4 of them have cost me, what do you call it, an extension fee. So I wanted to ask, and I didn't anticipate it would. So what is the best time to lock? Now, I know I don't lock until the file has been to the processor and the processor has everything they say they need, and then we talk about it and said it's okay to lock. But if we're locking, I'm only doing 30 days and I've missed now 1, 2, 3, 4, and I'm eating it, and I'd rather know what's the best way. Should I wait until UWM already has everything and they say, yes, we look good, or we do conditions? I don't want to wait too long, but at the same time, I don't want to wait either until the night before we fund, right? So what is everybody doing?
I highly recommend locking when the appraisal comes back, because you're ironing out like potential delays, potential issue. That way, if the appraisal comes back and you skim through it, or you have the underwriter take UWM, for example, you take the appraisal, you upload it, and we'll review it within a day or 2 or 3 days, depending what the timeline is. And then once the appraisal comes back clear, you can go ahead and lock the loan. If the appraisal comes back there's major issues, I would definitely hold off, because you don't want to get yourself in a position where rate lock expiring, and rate lock extension, and things like that. Over the course of my 17 years of career, 95% of the time I lock at the appraisal. The other 5%, it depends on the program, depends if somebody says, Paul, no, I want you to lock now.
Okay. Well, here's the thing. And I get that, but so far of the 4 issues that I've had, they've had appraisal waivers. So I'm not going to be waiting for any appraisal, or already up front, I'm doing without an appraisal. So what point, forgetting say the appraisal's fine, I'm waiting until UWM says, all right, we have everything and here's the conditions, and we look at the conditions and realize they're all fine, that we can get them all? Is that the point? Or can I pull the plug earlier? Because it should only take 2 weeks from the time, 2 to 3 weeks, right? Or less to close once they have everything.
Right. No, I agree with you. So you're asking me at what point in time to lock the rate? I didn't understand.
Yeah. What's a good time to lock the rate? And let's say I know I'm getting an appraisal waiver from day one. There's not going to be an appraisal. No reason.
Right.
Okay.
And like I said, the good time to lock the rate is when the appraisal comes back. Really?
He's getting an appraisal waiver.
Oh, I'm sorry, I didn't hear that.
Yeah.
Appraisal waiver. After the initial underwriting, because that's when the underwriter validates the appraisal waiver. So if you did your job right, like I was just talking about earlier today, or this last hour, if you do your job right, I would definitely lock right then and there. Definitely. Just lock it. If there's no other issue. If there's an issue somewhere down the line that you feel like, why do I feel like this appraisal waiver is going to go away? Just hold off on locking. Because I've seen it where the final underwriting comes through, the underwriter goes, oh, no more appraisal waiver. Here you go. I need the appraisal.
Yeah, we actually had one that did that, and the client got upset because he thought he was getting a waiver, and then went into underwriting, and lo and behold, they wanted an appraisal.
Right.
Okay. Thank you.
I think that's all I have for right now.
Yeah.
I definitely have a couple of things that I definitely want to share the next time around, and I definitely have a challenge for all of you. Maybe next time, maybe you all can turn on your camera. I would love to get to know you. Associate names with faces. That would be super awesome. And I appreciate all your time.
Yeah, I appreciate yours as well, and we'll be in touch. Obviously,
My picture's on right now. Hello.
Yeah. So cool. Well, that was really informative. So again, we appreciate your time, and then we'll see you. We'll see you in 4 weeks. Last Tuesday, every month.
Oh.
Okay, sounds good. I'll be in touch, Paul.
All right, thank you. You all take care.
All right. See you later, guys.
Thank you. Thank you again.